Hello, and thanks for taking the time to watch this two-part tutorial on local property tax calculations. The O No 60 project brings information to everyone in Maplewood about the plans for the village post office. It is our hope that sharing this way will increase involvement townwide, leading to the best decisions being made for the use of the site. Hopefully by now you've seen the red O No 60 balloons. Welcome to our first adventure in webcasting. Part 1 is an overview of the financial considerations regarding the site and a discussion as to how they impact the choices that are reasonable, that is to say, financially reasonable, to consider. Part 2 covers the same topics in greater depth for those who would like to know more about the analysis. There are many approaches to this site and plenty of exciting alternatives, so let's jump right into it. A small bit of history helps one appreciate the tremendous value financially and in general that this site embodies. The U.S. Postal Service has vacated the building. The lease that they were under expired in 2013, and the building is now town-owned. In essence, it was a gift in that the property reverted to the town when the lease expired. Rent has been collected from the Postal Service since 1960. The site now represents a fantastic opportunity to benefit the village and the township. It's prime New Jersey real estate. It's located in our town center. It's a unique parcel in a unique location regionally. It's a special opportunity for the community to control a prime piece of real estate and make decisions that are in our best interest. And given this context, it's important to assess all of our options. It really is a once-in-a-lifetime opportunity. So there are 4 general alternatives. As has been done in the past, the site could continue to be rented by the township, as is, to a new tenant. It could also be rented in an improved, enlarged, or repurposed condition, in which case, of course, it would generate more income. The second alternative is that the site be sold, and it might be sold to an investor. That would be an individual or firm who would improve, enlarge, or repurpose the building, and the township would collect taxes, or it may be sold to a developer who would remove the structure, rebuild a new one, and the township subsequently would collect taxes. Of these 4 alternatives, the JMF proposal that's being reviewed only considers approach 2B, that is to say demolition. But with this proposal in hand, it's now possible to compare it to other alternatives. So let's start with the question, what is the property really worth? And it comes down to 2 numbers. The first is revenue. All 4 approaches would generate revenue for the town in either the form of taxes or rental income. If the township chooses to sell the site to an investor or developer, taxes will be collected, and that, of course, may reduce the taxes that everyone else pays. In the case where the site is sold, there's also a profit from the sale of the site, and that is to say that there would be one-time proceeds from the sale that could be applied to township bills and or might result in a reduction of taxes. These 2 numbers tell us what is financially realistic to consider for this site. So let's look at the first one, and that is the profit from sale. What would the profit be if we were to sell this public land today? 2 basic scenarios. One is it's sold to a developer, and one is it's sold to an investor. And these differ in 2 key points. The value of the sale and the expenses incurred in the sale. In the case of a sale to a developer, the sale is actually of the land only. The developer is not interested in the existing building, which would subsequently be demolished. So the land value, as reported by the town, was assessed, or appraised rather, at $1.2 million. And there was approximately $300,000 in closing costs, demolition, and remediation costs, leading to a net expected value on sale of $950,000. The value of the property currently with the land and the structure is about $1.8 million. And if an investor were to buy it with the intention of improving it, there would be remediation costs and some transaction costs, but it would be reasonable to expect net profit of around 1.6 million. So there are three conclusions that we can take away from this. First, that the sale to a developer results in a lower profit because the developer is not interested in buying the building, that is to say, paying for it. And also there's an incurred cost of demolition. The second is that in both of these cases, the township loses ownership and control of the property. Now, in selling public assets when land is highly valued, it is usually only considered in cases in which a sale uniquely leads to superior results and or in which financial hardship is extreme. Since neither of these apply here to this site in Maplewood, we should be very clear as to what the benefits of selling really are. And finally, to put things in perspective, the profit from selling to a developer is really not much more than the value of the sale of one or two homes. And that should be a red flag cautioning that results other than cash profit should be looked at when considering selling public land. So let's take a look at the annual revenue potential. In this case, there are a couple of additional scenarios. Of course, the revenue could be in the form of taxes or rent, and we'll go through those one at a time. In the first scenario, the township continues to own the property outright and rents it. It's currently rented at about $185,000 a year, which is about 11% return on the building's value. In the past, the post office paid about $12 per square foot annually. Village rents are typically 2 to 3 times higher than that currently, so it was being rented at a very low price. Consequently, it's reasonable to expect that a repurposed building would generate $300,000 or more in rental income. In this scenario, the township retains ownership of the real estate, controls its use, and also retains the option to sell it in the future. The second scenario is when it's sold to an investor. If the site were sold to investor as is and used essentially in as is condition, it would raise about $63,000 a year in taxes. If it were improved, it could be worth, or rather it could generate as much as $160,000 in taxes, and that's based on two assumptions. One is that the improved or enlarged building would be worth more, and secondly, that once purposed for market rate rents, its income would be perhaps 30% higher at least, and those factors would contribute to it paying much higher taxes than it would in its current condition. The final scenario is the site could be sold to a developer and demolished and rebuilt. And the estimate there is that the taxes generated would be under $200,000. That's based on the current proposal, based on the appraisal that the township released last week. The numbers would be substantially less if a pilot program were approved. And it's important to note that the local market should cap this rate. In other words, the taxes generated by this building is largely determined by the rents that are collected. And to the extent that the taxes go up, it's reflective of the primarily of the retail rents going up. And we do really at this point do not want to do anything to substantially raise the rental base around town and create additional competition as it's a priority to keep the remaining businesses in town healthy. So the takeaway from this slide is that rental income can actually be higher than the tax income, substantially higher under some of the scenarios. But to put the entire slide in context, for the medium-sized home, the annual benefit from any of these alternatives is not more than about $10 a year on your local tax bill. So what do these numbers tell us? Well, first of all, regarding annual income, that demolition does not lead to the highest annual income. Revenue, whether it be tax or rent from this site, is a very small portion of the typical tax bill. And the rental option itself generates the highest income and sustains the ownership of the township with the option to sell in the future. Regarding the profit from sale, we see that it's much lower if the building is demolished. In general, it's a tantalizing approach to balancing the budget. It's essentially cashing in on a 11% return on investment that was a gift that has fallen into our lap, our lottery ticket of sorts. We'd be selling that for a cash infusion, um, but it's a dangerous way to get a cash fix. That is to say, through sale of an asset that's appreciating in value. So simply put, a site of this size could never address the tax burden in town in any material way. What can be done with it beyond its immediate financial value is what determines its best and highest value. And this is largely due to the fact that there is an existing structure on the site that's easily reused and easily expanded on as well. So here's where we are. Early in 2012, a planner solicited township input and wrote a redevelopment plan. The township issued RFPs, requests for proposals, that requested bids for the removal of the building and new construction. L&M was the developer that was selected in late 2013, and they later withdrew. JMF Properties was selected in late 2014 and is currently negotiating with the township. That discussion started with the L&M design, and the town is currently waiting for new renderings from JMF Properties. No site plans or any detailed design has yet been done. The township seeks to complete negotiations as soon as possible and has proposed a contract signing date of July 15th. The larger question is, why are we here? And the story is a little bit of history. About 5 years ago, in 2009 or 2010, King stated a desire to expand into the village. The township sought designs that included a grocery store, some retail, and apartments. In fact, their request for proposal required those. No proposals were received that didn't include a supermarket. King's declined to relocate after negotiating with L&M. JMF Properties, when they were brought on board in 2014, was told to use the L&M design as a starting point. History, in fact, has resulted in a very narrow view of how this site can be used. And Mayor DeLuca, as recently as a month ago, acknowledged that plans do change over time. He was quoted as saying that the expected plan adopted 18 months ago has evolved with the involvement of JMF Properties. The issue really is that the plan was conceived 5 years ago. And as a result of that, it really is time to refresh our goals and review the alternatives. The truth is that many approaches can work on this site. The true value we realize is really a choice that we can make. So have goals been discussed? Has value been discussed? In fact, it has. Over the past 2 to 3 years, there have been a number of forums where input was solicited or offered, including a couple of township meetings as recently as this past month. Those are all available online. Some of the references appear at the bottom of the slide. In summary, the concepts on value that have already been shared, already discussed, include the idea that using community input and dialogue will be a good way to build on the current village assets and the branding of the village that we know has been very successful. Some of the concepts that would be complementary have been described as new active uses that would increase shoppers throughout the village. That would include destination uses for town and county residents beyond just restaurants. The embracing of small businesses, cottage industries, professional or studio spaces, startup businesses. Also provision of complementary services, a wellness center or a fencing alliance, or services that support affinity groups, young families, students, seniors, things of that sort. And many people have commented that the woodland is actually a good example right in our midst. It's essentially a success with a multiplier. It's culturally oriented, but it also is recognized to bring a lot of foot traffic into town. So the question's been asked, what can we learn from that? What can we do other than cultural that might have the same result? And finally, sustainability and green features. A strong desire to make a statement, create a model right in the center of town. You know, after all, Greenness 101 is evaluate alternatives to demolition. That's really where you start when you want to have a sustainable project. So, by way of conclusion, what we've gone over here today is that sales profit and tax revenue need not be our number one priority. There are numerous approaches that produce financially viable results and comparable revenue. Alternatives deserve evaluation. The current scope that we're looking at with the JMF proposal is narrow, and it's driven largely by developer economics. And in fact, the township and the developer have the option to withdraw from negotiations at any time. We understand why history has brought us here. Essentially, a plan was envisioned 5 years ago that would accommodate Kings in a new, larger space. They subsequently decided not to move. And so the question becomes, what can be done? Well, everyone can join the dialogue. Some of the key points, we should be insisting on evaluation of alternatives. This can be done at township committee meetings. It can be done by emailing committee members. We should be assessing election candidates on this issue. The primaries are in June, and the Democratic nominees will be determined in the next week or so. So the issue is quite timely and germane. Everyone can follow ono60 on Facebook and visit the ono60.info website. We've got a lot more information coming, and we hope to share it with everyone. So if you would, spread the word, share, comment, email, and yes, by all means, talk about it as well. That's about it. Hopefully that's been helpful and informative. Part 2, which goes into a little more detail, will be available online soon. In the meantime, please connect with us and join in the dialogue. Thanks.